Hello, and welcome to the Small Business Payments Toolkit webinar for financial institutions created by the Remittance Coalition. I'm Amy Vaughn with the Federal Reserve, and I'll be your moderator today. Joining us are presenters Sandy Jensen from the Central Bank of the Ozarks and Matt Davies from the Federal Reserve Bank of Dallas. We also have Mary Hughes from the Minneapolis Fed. She serves as the project manager on the Small Business Payments Toolkit workgroup. She's going to facilitate the questions. If you haven't done so yet, click on the webinar link you received upon registration. This option offers a few benefits. You can watch the slides as they are advanced. You can listen to the audio through your PC. I would like to note that the webinar performance does depend on your connection, so if at any time you're having problems, just pick up the phone and dial the toll-free number. You can type questions to us using the Ask Question button in the webinar, which we will be addressing questions at the end of the call, but send them in. We will keep them on hand for the presenters. And you can download a PDF version of today's presentation by clicking the Materials button. That's on the bottom of the screen of the webinar. You will be able to find the presentation on the fedpaymentsimprovement.org website, where we will also post the recording of the session in the near future, along with the slide deck and a summary of the questions and answers. This is also where the Toolkit link is located if you want to download a copy of the document. Let's move on to slide 2. We have a few polling questions throughout today's presentation, so I'll share the first one with you while I cover the disclaimer. So First polling question is, what percentage of your current corporate customer base are small businesses? Your options are 0 to 25%, 26 to 50%, 51 to 75%, or 76 to 100%. So while you're answering that, I'll read the disclaimer. The opinions expressed are those of the individual presenters and not those of the Central Bank of the Ozarks or any Federal Reserve Bank, staff, or the Federal Reserve System. The Small Business Payments Toolkit has been created by the Remittance Coalition and is intended to be used as a resource. Views expressed here are not necessarily those of and should not be attributed to any particular Remittance Coalition participant or organization. They are not intended to provide business or legal advice, nor are they intended to promote or advocate a specific action, payment strategy, or product. Readers should consult with their own business and legal advisors. I'm going to go ahead and stop the poll results and show them to you now. And it looks like the percentage of your current corporate customer base, small business, 35% say 51 to 75% are small businesses, 26% say 76 to 100% are small businesses, 21% say 0 to 25 are small businesses, and 18% say 26 to 50% of your customer base is small businesses. With that, I'm going to stop the poll, and we'll turn to slide 3, and I'll turn it over to Matt Davies.
Thank you, Amy. We want to welcome everybody to the webinar today to talk about the Small Business Payments Toolkit. So first of all, we thought we'd set the stage a little bit. I'm not sure how many people have actually had a chance to go out and look at the toolkit in much depth. But to give you a little bit of background, what exactly is the toolkit that we're going to talk about today? This is a free set of resources. I know this being a banker audience call, bankers do tend to like things that are free usually. So this was created with the intention that it could be used by both small businesses and by the bankers who advise them. The intent here is to encourage adoption of electronic business-to-business payments and exchanging of remittance information electronically by small businesses. So you can find the toolkit itself at the link that you see there on slide 3. The toolkit has been created by a subgroup of the Remittance Coalition and was rolled out earlier this year. We're going to talk a little bit about the Remittance Coalition and the Federal Reserve tie-in there. But in addition to the Federal Reserve being involved in the Remittance Coalition, there's also another connection to the Fed here. Again, not sure how much time. I know you're all busy bankers, but if anyone has had a chance to read the Federal Reserve's paper released in January of this year called Strategies for Improving the U.S. Payment System. One of the strategies outlined in that paper, specifically Strategy 4, is kind of what led to the creation of the Small Business Toolkit. So turning to slide 4, not sure if other folks on the line have heard of the Remittance Coalition before, but again, to kind of give you some background on that, this is a group, national group in scope, associations, businesses small and large, financial institutions, vendors of technology and software solutions, and standards development organizations. This group was formed in 2011, and currently we are 400 members strong and continuing to grow. There are no requirements for joining. You don't have to pay dues to belong. The only thing that the Remittance Coalition asks is that you bring a willingness to work together with other members of the group to the table. It is a volunteer organization, so work that's being completed, being done on a voluntary basis. The mission of the Remittance Coalition is the intent is that all of these different players that are involved will work together to solve problems related to remittance processing associated with business-to-business payments. The goal here is that you will promote electronic payments and the idea of straight-through processing. So on slide 5, we give you a link to further information about the Remittance Coalition. You can take a look at the site if you want to learn more about what the coalition does, if you're interested in joining, and or if you want to volunteer on a project with the group. So turning to slide 6, I mentioned the Federal Reserve's strategies for improving the payment system. Of course, we at the Fed, and I think all of you bankers on the line as well, we love acronyms, so we are referring to that as the SIPS paper so that we don't have to say all the words. So the paper, specifically Strategy 4, as I mentioned before, is seeking to achieve greater end-to-end efficiency for domestic and cross-border payments. So you see several tenets associated with this strategy, such as ISO 20022, a international financial messaging standard. You may have started to hear more about that from us at the Fed, from NACHA, from the Clearinghouse, and from other groups. That's one tenet of that strategy, but another tenet of the strategy is to accelerate adoption of electronic business-to-business payments, and having stakeholders address barriers to processing electronic payments and remittance information. So moving on to slide 7. Again, for further information, if you want to look at more information about the Fed's efforts at kind of pulling the industry together for improving the payment system, you can see more information about that process as well as the Remittance Coalition at fedpaymentsimprovement.org. And then, of course, we are, like everybody else, moving into the sphere of social media, so you can follow our initiatives on Twitter, YouTube, and LinkedIn. So slide 8 just kind of gives you an idea. We're going to talk a little bit more in depth about some of the contents of the Small Business Payments Toolkit, and we've tried to, in the webinar today, call out kind of what we think are highlights of the kit that you as bankers listening in might be able to take away and talk with your small business customers or potential clients about. So we're going to look today at the contents of the kit, which include payment types explained, understanding ACH, working with your banker. So bankers, don't be alarmed. We're not giving away all your tips and tricks to the small businesses that are looking at the toolkit. We're going to talk about fraud prevention and mitigation, and then talk about the resources that the toolkit also directs you to. There is a glossary, some information on credit and debit cards, ACH resources, general resources for small biz, and fraud and data security resources. So before we move on to slide 9, I'm going to turn things over to my colleague, Sandy Jensen.
Thanks, Matt. As we move to slide 9, I want to kind of set the stage for my portion of this presentation. The committee that worked on this toolkit had members from small to big financial institutions. We had vendors, we had the Fed, other associations, and everyone had to input with the data. I was asked to give you the view from a financial institution, so I'm going to try and tell you what I've done right and wrong with some tips that I've tried. When our committee put this data together, we tried to go back to basics. Why back to basics? Because we, bankers, can easily confuse businesses. How do we confuse them? As a banker, I think we are sometimes guilty of assuming that people understand payment types, and as Matt said earlier, we use acronyms or our own product name. An example that I struggle with at our bank is our remote deposit captured is called e-deposit. And a new customer has no idea, nor do they care what we named our product. So I try to just stick to the word remote deposit. Plus, don't forget, debits and credits are backward in banking versus accounting, and that further confuses the business. This is something I remind myself of daily. Finally, vendors also use different names to identify products, so we need to stick to basics. Before we go to slide 10, Amy has a polling question for us.
Thank you, Sandy. That's right. I'm going to pose that question to everyone on the webinar right now. Have you had a customer confuse an ACH with a wire? Your options are yes or no. So I'll give you just a few seconds to answer that. And then Sandy will probably make a few comments on the outcome. I'm going to go ahead and stop that now and show you the results. And those results are a resounding yes. 88% of you say you have had a customer confuse an ACH with a wire. 12% say no. So
that's what we expected, isn't it? Well, I want to give you an example. I really thought this would be the way it showed. But a few days ago, we had a local closing company called us several times and asked if we'd received a wire for a closing they had scheduled that day. We kept saying no. Finally, after much discussion and quite a bit of detailed research, we found they had an ACH incoming for that closing. But no one noticed, not the customer, not my department, because we were looking for that incoming wire notification. When assisting customers, financial institutions need to be on the same page as the business and ensure that they have a good understanding of each payment type. If we don't ask the questions, we can't help them identify the differences and may give the wrong information like we did. Slide 10 shows you how small businesses can utilize different payment types originated. But also keep in mind this diagram can be used for how they plan to accept incoming or receive monetary value from their customers because they're going to be looking at both sides. Another reason that we need to know about the small business types is our staff at our bank or financial institution may not have a good definition of a payment type if they're not back office. I'm talking about your sales force, your new accounts. A good example that I see more often than not is when a customer service person asks for a phone number for an ACH transaction. When we research it, we find it wasn't an ACH transaction. It was a debit card transaction. But the description was on the statement, just like an ACH. So, more confusion. We need to educate businesses on bill pay. They need to understand the differences when remittance is ACH versus a check and the clearing times associated. We also need to show them the pros and cons of debit and credit cards. And finally, fraud on checks, that word none of us like to hear. Moving on to slide 11, we're getting into a little bit deeper dive on these payment type descriptions. Starting out with ACH, ACH is really the only push-pull payment option. with a 1 or a 2 day settlement time frame and hopefully going to same day soon. When you're thinking about an ACH debit, hopefully we can start marketing this more so it can be used to make vendor payments. And when we think of ACH, we can maybe market this more to not-for-profit. That's kind of a niche that we ought to be able to utilize. But remember, we talked about earlier that there's a difference in debits and credits or backward for customers versus banks. So I have come up with something that I use. I tell the customers that since cash is paid out is a credit, think of payroll as just cash being paid out, hence the credit. For debits, I tell them if they're thinking of cash being received, because sometimes they get that offset mixed up in their mind. Then we need to explain to them, especially on the ACH debits, that there is less insufficiency because they can pick the day they're going to have it hit, and they are going to have a memo hold out on that account to get their money first. Talking about checks, we really all know what checks are, so I won't describe them. But what we need to tell them is a check account number being given out is very high risk. We had a customer that mailed a check to a vendor, and the mail was stolen. So you can guess the rest of the story. With all the camera phones and the color printers, it's just too easy to accept fake checks or have fraud on your account. And we know this, but does the customer? They may not realize how much fraud there is out there. On wires, what I try to tell them, it's a high-dollar hot item. It's irrevocable. It's funds from intraday. And that's why their fees are higher, because they don't understand. Since we just had our poll, the difference in an ACH and a wire, I can usually explain to them because of the fees, because of final settlement. Another thing that I'm experiencing with more international trade, even for the small businesses, these types of payments take on a whole new meaning. Checks now have to have a collection process if they're international. ACH, there's a lack of universal rules. And wires have those nasty little haircuts to where they expect, $100,000 to come in. It just was dropped by $50. If we go on to page 12, we will continue looking at the different payment types in a deeper dive. We're talking now about credit cards and debit cards. We understand what that means, but sometimes customers get it mixed up. A credit card has a balance, almost like a line of credit, subject to interest being charged. But a debit card's coming from their own account, and I think that they confuse that on when they're using it someplace and they say debit or credit, and they're not even sure. The one thing to think about with credit cards, if they're using them to pay bills or originate payments, it's usually a lower risk for them over a debit card because the business owner is able most of the time to set limits or types of use for his employees. Now, credit cards being accepted, the fees are usually higher, of course, than an ACH or a check. The one thing that has helped in many ways is the Square, and I know all banks hear that and they just panic. But the Square was good for education and wider acceptance, but it's very hard for financial institutions to compete with. When accepting credit cards, I try to tell not-for-profits especially that if they're going to accept a credit card, fine. But if they're accepting a debit card, they should try an ACH because if they educate their members, it usually is accepted, and then the not-for-profit gets a better revenue stream. Some other options that I don't think bankers like to talk about, but we do need to understand, Google Wallet. I actually looked this up. The definition is a free digital wallet that securely stores your credit card, debit card, lets you shop in stores, buy online, and send money. And PayPal can be used to send and receive payments, money online, and when you send money, you can choose to fund your payment from your PayPal account, a credit card, or your checking account. Finally, let's talk about bill pay. We need to let people know that bill pay usually saves them money. It's very cost effective. It saves time. It saves on ordering check fees, the stock paper checks, and postage. Depending on the vendor, they may be able to have e-invoicing, They may be able to utilize it for a small payroll, and they may even be able to have dual control on it, which is a win-win for the customer. Moving on to slide 13, this is my favorite slide. I like to use this to just hand a customer. And I know you all can read, but I'm just going to point out a couple of things. If we start out with ACH, the lower fees and the lower fraud, that's the way I promote it. The cons to ACH are they're not final until settlement versus like a credit card. Internet bill pay, as I just said, saves time, cost, but you do have to know that payee and have that banking information. Credit cards, easy to use, widely accepted, but we've got those fees again and equipment. Wire transfer, as we talked before, near real-time delivery, or certain delivery rather, but high fees. And business checks, widely accepted. But we've got lots of handling on them. We've got lots of fraud. So I think this page is so great to actually hand to a customer and let them really see this and help them make informed decisions of money out or money in. Now Amy has another polling question for us before we move to slide 14.
Thanks, Sandy. We do. We want to know, do you have dedicated staff at your bank or at branches, for those of you that have them, who can handle questions from small business customers? And your answers are yes or no. Pretty simple answer, so I won't give you too long. Hopefully you can just let us know, do you have dedicated staff who can handle questions from small business customers? I'm going to go ahead and stop that poll now and show you the results. And I'll read those out. And yes, 74% of you do have dedicated staff to handle questions from small business customers, while 26% of you do not. So Sandy, would you like to comment on that?
I would. I think that's excellent. I'm very happy to see those numbers. I am very pleasantly surprised. Because on slide 14, I wanted to point out, talking with small businesses, sometimes we have a challenge of getting an opportunity for our educated staff, educated in electronics, to visit with the customer. So the thing that might help us is if we encourage new account personnel and loan officers to let the treasury management or commercial banking reps get some face time so we can talk to them. Okay, on slide 15, this is the kind of what's in it for me if I do this, if I get to talk to them. The reason we want to, obvious, is stickiness, value added, and it helps them work with larger vendors. There are so many independent service providers and industry-specific vendors that are targeting these businesses. It's a challenge for financial institutions to sell these products. Plus, there's many, many internet offerings. And let's face it, banks are slower to react to products because they're conservative, right? And we are regulated. We are required to perform due diligence and underwriting. So we have to sell ourselves that we are a very trustworthy resource and a valid partner. We can help them find the proper fit and build a relationship with them to help them grow their revenue and grow ours. Remind customers that the government basically set the path for electronics, and some of the government entities pay exclusively this way. So if the small businesses are working with ACH, they will be able to work with those large trading partners. We also need to educate that electronics can help reduce fraud when they're handled properly. When we have fraud on a business account, we right away suggest direct deposit because it usually you have a lot of fraud in that area. Moving to slide 16. How do we actually do this now? So I have some suggestions. Many new account persons know more about retail accounts. So have your commercial area help the new account people by developing a needs assessment so they have good questions to ask. Remember, they may be the only staff that has an opportunity to talk to this business. Find out where you can get a list of new accounts being opened and do some follow-up with it. This is kind of like your internal data mining. Try to build a relationship with lenders and retail for your leads. And then research low-hanging fruit. If you have an account analysis system or another database, you can do some research, maybe for a niche, like churches. You can check existing customer account activity. We're going to have a case study in that. Just some ways to look. If you can, budget for incentives for your frontline referrals. And then the biggie, ask for the business. Then ask satisfied customers for their referrals and offer them an incentive. So moving on to slide 17. Okay, we've got our data, we've analyzed it, and now we have our talking points. What I like to do is start with ACH or payroll because people get that, and so then you can expand on ACH. I would suggest you find out if your state allows you to have mandatory direct deposit because that's a win if you can. The state of Missouri does, and so I can usually use that as a very good selling point. That helps you get a starting point to talk to the business. After that, you're going to need to talk to them about fees. I use the calculator at electronicpayments.org to show cost savings, and never forget, never forget $10,000 to a small business is like $1 million to a big customer. I have to remind myself of that. Try offering them a free month of a product, or a little longer if they need to, get them basically hooked. Also, many vendors have ACH and other electronic educated people. Become one too, and it looks like from our survey you are, so I'm very proud. That way you can help your customers locally. Stress to the business, if they grow their relationship with a financial institution, the more services equal a stronger relationship. Stronger relationship can equal better fees, better loan rates, and you're only a phone call away. Disclose to them any underwriting that you have to do with options if you can offer them. Can you pre-fund a payroll? Is there a line of credit you could secure? Or maybe they could just pledge a CD so that you could get them started in electronics. Don't forget the obvious. Educate them on securing payee information and secure shred. Okay, going to the next slide. This is our case study that I did, and hopefully it'll help you. I do this quite often. If you look at the example in the turquoise blue, you'll see that this customer, and this is right off their bank statement, this customer is making a deposit that had 5 checks included in it. So that tells me maybe they need remote deposit. Maybe they're a small business that can't allow someone to leave the office to bring deposits on time. Small businesses love remote deposit. So this is someone I could target. The next line is they have merchant settlement. That means they're using a different provider than letting us sell our merchant credit card services to them. Maybe we could offer them a better price. And the last thing is Intuit Payroll for QuickBooks, and I am not trying to alienate any vendors. There's room for us all. But since you see they're doing direct deposit, again, maybe you can offer them a package deal doing their direct deposit for them. At least it gives you a talking point because they're already using that as an electronic. Looking down into the orange area, this is off a different customer statement. And if you'll look, a bunch of checks with check numbers very similar are all cashed or deposited on the same date. When I looked at this, I actually looked up copies of the checks and some history and saw that they are paying out paper checks. Why not hit them up for direct deposit? Maybe you could offer them a lower fee. And if you get an opportunity to talk to tellers, I will tell them, look for a payroll check being cashed, whether it's on our bank or another bank, because that would be a really good way to go after some business. So I thank you very much for your time. I am going to turn this over to Amy for a polling question and then back to Matt.
Okay, thank you very much, Sandy. We'll go to our next polling question, which is, with which payment type do your corporate customers see the greatest number of fraud attempts? Your options are check, ACH debit, social engineering attempts to initiate a wire transfer. And while you are making your choices, I'll give you just a few seconds before we turn over to Matt. And I'm going to go ahead and stop that poll right now, show you the results, share with everyone that the type of payments your corporate customers see the most fraud attempts are through check. 73% say you see check. 16% say social engineering attempts, and 11% say ACH debit. Okay, I'm going to go ahead and close that, and we will turn it over to Matt.
All right, thanks, Amy. Kind of like Sandy did with the beginning of her session, I kind of wanted to use this polling question to kind of tee up a little bit of what I'm going to talk about. What I would mention, too, in advance is that I think the check fraud area is one that, has been a problem and will continue to be so. And one of the things that we're getting a little bit nervous about from, talking to our community bankers is that, and talking with businesses as well, is that as the move to chip cards with moving to the EMV standard, as that starts to kind of lock down the ability of some fraudsters to commit credit card fraud at the point of sale, our sense is that some of the sort of old school check fraud scams are going to sort of rear their ugly head again. So that's probably something we'll need to continue to be vigilant about as far as check fraud goes. So let's see, moving on to slide 20, again, kind of like Sandy said, I know that everybody on the call can read, so I don't want to go through the slides and read them all to you, but we do talk in the toolkit quite a bit about payments fraud because it is such a hot topic. One of the concerns we had is that, while large businesses tend to, have deeper pockets to spend on combating fraud, some of your small business people, they're not an IT person, they don't have the funds to pay for some of the software for fraud prevention, for example. So we did want to spend some time in the toolkit highlighting fraud and some of the best practices and tips that small businesses may want to look at to combat fraud. And you see on the slide here the statement, we are trying to make sure they realize that all payment methods do carry the risk of fraud. So some things you might want to talk about with your small business customers, including check fraud. I would highlight there, we mentioned duplicate deposits. And that has been an issue that has grown with the advent of mobile remote deposit capture in particular. Now, as of right now, we see that as primarily an issue for consumers, but our concern is that that will likely grow as financial institutions start to make available mobile remote deposit capture to corporate customers. To give you an example there, this is a large business example, but I think we'll start to see kind of the trickle-down effect of this. We have a construction company that we interact with fairly regularly, and they mentioned that, they have hundreds of job sites throughout the country, and for them, having a desktop scanner at each location for the, maybe one or two checks that come in each month is cost prohibitive. So their financial institution has worked with them to allow them at those job sites to use mobile remote deposit capture. So again, I think you just need to be on the lookout for potential growth in that area of fraud. We do talk in the toolkit too about, ACH fraud and ways to work at preventing that. Hacker attacks, I think that's something we'll talk a little bit about further. I've got some things to talk about on future slides with that, but that's something that I think is a growing area. We've heard from a lot of large businesses, and as you guys know, a lot of times when the fraudsters move against large businesses and their attempts fail, they tend to move down the chain to the mid-size and small businesses. And then there is a section in the toolkit, in the fraud section, that talks about mobile banking and potential for fraud and malware and viruses there. As far as fraud prevention goes, let's see, this is on slide 21. Again, as bankers, I probably don't need to tell you guys that we strongly encourage daily reconciliation of accounts. I worked with a bank one time, spoke at a fraud seminar that they put on, and I was up there banging this drum for daily account reconciliation. And then at the end, during the Q&A, one of the corporates asked, he's a small business, and he says, so let me get this straight. You want me or somebody at my company to be checking my account every day? And the banker kind of backpedaled and said, oh, you probably don't need to do it every day. But yes, we do encourage that to be done every day. At a minimum, you guys know the return time frames for check and ACH items, fraudulent items that are debiting an account are just too tight for that not to be done on a daily basis. We do encourage in the toolkit the use of things like debit blocks or filters and positive pay, and I'm going to go back to the positive pay theme in a little bit here as well. We also encourage the use of setting policies, procedures, monitoring for compliance, and taking action on exceptions. On slide 22, what else should small businesses and others be doing? We look at cost-effective, I guess, is in the eye of the beholder, but, tools like positive pay, we strongly encourage that. We cannot stress enough the importance of employee education. I think a lot of times because we're bankers, we take for granted the idea that if we get an email that says, that appears to be from NACHA and says your payment rejected, click here to provide payment instructions, we know that's ridiculous, but a lot of people at a business don't. So education is extremely important there. If businesses have the ability to monitor and measure fraud attempts, that's something that is great for them to do as well. Keep in mind that you have standards like commercially reasonable, and I think that to look at what's commercially reasonable today may not be what's commercially reasonable tomorrow. Sandy already alluded to securing bank account information, proper storage, use of strong passwords and frequently changing them. Again, I know, working for the Fed, I can't keep a password for anything, I think, longer than 30 days. But a lot of small businesses don't necessarily look at it that way, and they may have people in the office who are actually sharing user IDs and passwords. A couple of other things I would mention here, too. I think this is probably a good opportunity. I know at the Fed and I know at some of the big banks that I talk with as well, we used to be able to go to Facebook here. That has definitely fallen by the wayside. No social media. We can't access social media from our PCs. We cannot use thumb drives that are not issued by the Fed. Discourage businesses from taking those thumb drives from conferences and using them. I know it seems remote, but there have been fraudsters who have dropped infected thumb drives into bags at conferences. They are always thinking of new and different things to do, that's for sure. And last thing, and I know especially at a small business, I think a small business person would tend to cringe if you talked about the idea of using a dedicated PC for online banking. I have seen, actually there was a story in, I think, American Banker a little while ago about a community bank where when they cycle through a PC, if they replace their PCs every 3 or 4 years, when they're finished with one, they will offer it to a nonprofit customer of theirs so that they can use it as a dedicated PC for online banking. So as community bankers, you may be able to think about sort of out-of-the-box opportunities like that to help your small businesses. All right, so on slide 23, again, I won't go through these and read all of them to you, but these are all things that are mentioned in the toolkit. We do talk about positive pay, and on the next slide, I think I'm going to give you, I'm not an attorney, that I probably should have included that in the disclaimer, but I think it's interesting to look at some of the cases that have gone to court in particular. One thing I would mention, we do a lot of outreach at the Fed with businesses and merchants in particular. Under check, there's the idea of consider not accepting checks. I know Wendy's is an entity that has publicized the fact that they no longer accept checks. The guy said that not a lot of people are passing bad checks to pay for a hamburger, but the checks that they were taking, there was a likelihood, a certain percentage of those that were fraudulent, so they decided to stop accepting them. The last thing there, under check, limit number of checks issued. We strongly encourage, and you should encourage your small businesses to use ACH and wires for large dollar payments whenever possible. Under the ACH section there, kind of the middle, a few things I would highlight too. The idea of out-of-band authentication, and I think actually that probably fits better under ACH credits if we're talking about payroll origination, but could also fall under ACH debits for files originated. I know when I worked for a commercial bank, we had a voice response system, and when a customer sent a file through online banking, they had to also call into voice response and key enter their totals. Well, our customers hated doing it because it was an extra step. Our ACH operations didn't like to do it because anybody that sent a file and didn't call, or called but didn't send the file, they were having to make a lot of phone calls. It was time consuming. So there was sort of, general rejoicing throughout the bank when we decided to discontinue that voice response confirmation requirement. However, in light of some of the corporate account takeover scenarios that have taken place over the last several years, the idea of that type of out-of-band authentication, so, file coming in through online banking and then some other form of validation of those file totals. I don't know that any bank has gone back to the old-school fax transmittal for confirming ACH files, but I have talked with a number of banks that have gone back to doing a voice callback to their customer to make sure that that file is legitimate. We also mentioned debit blocks and filters. Under mobile banking, one of the things I would mention there is that, well, actually, let me go to wire first, because one of the things I had noted here is that if you're not aware of it, I'm assuming that you all are, and perhaps you're painfully aware of the FFIEC supplemental guidance on online banking authentication. That really comes into play, has gotten a lot of attention because of corporate account takeover scenarios, and you're seeing a definite move towards, requirement of dual control for wires, whereas in the past sometimes that tended to be an option that was offered. That idea of out-of-band authentication, so requiring, doing a callback or voice confirmation. Under mobile, I wanted to make sure that you guys are aware that the FFIEC guidance on online banking authentication does also apply to mobile. And then lastly, if you do have, if you're offering P-card programs to your small business customers, make sure that they are, using available programs and tools that you may offer for monitoring their transaction activity and returning, making returns as appropriate. So next up on slide 24, again, I'm not an attorney, so I'm not giving legal counsel here. Want to be very careful about that. But as I said, I do think it's interesting to look at some of the cases that have gone to court and kind of how they've shaken out. So I put two cases on here that I talk a lot with banks about from a fraud perspective. The first of these is Cincinnati Insurance Company versus Wachovia Bank, which we now know as well as Fargo. This is a case that you might be able to, since you're all bankers on the line, you might be able to use this when talking with a business about use of positive pay. One of what I think businesses think is a problem with positive pay is that they want it for free, and we, or you as bankers, want to charge for it. So that can sometimes be an issue. Some businesses will say, well, we don't need that positive pay. We've never had check fraud before. Unfortunately, that's not how it works. So in this particular case, there was a corporate customer of Wachovia's, which I believe was a bakery company. They were hit by fraudulent checks 3 times, and I believe the bank went back to the bakery company and said, all right, we've covered you each of these 3 times. We will not reimburse you for a fraudulent check if you are not using positive pay. So the corporate customer declined positive pay yet again and opted instead to get an insurance policy to cover them in a case of check fraud. So, having been hit 3 times, of course, they were hit a 4th. I think this was a check for $153,000, if I remember right. So they filed a claim with their insurance company, which paid it out and then sued the bank to recoup the funds. And the verdict in this case actually went in favor of the bank, and the logic was that the bank had offered the corporate the ability to protect its accounts with positive pay, and the corporate had declined that, so was not really looking out, for its own best interests. The second case I mentioned on this slide is a corporate account takeover case, and just to level set in case you're not familiar with what that is, when I say corporate account takeover, I'm talking about a situation where a business has a PC at the office that's being used for online banking. Unfortunately, in most cases, that is not only being used for online banking. It is also being used for searching the web, visiting social media, clicking on links that the person, shouldn't be clicking on, but they do it anyway. So they may provide a hacker with an opportunity to drop some software onto that PC that's typically key logging software. So it's going to capture, the next time that person logs into online banking, anything they type in the screen, so user ID, password, etc., they're going to be able to capture that, and then they can use that information to log into online banking as if they're the customer and initiate ACH files or wire transfers. So there are several well-known corporate account takeover cases that have turned out in different ways. I put on here one of the most recent that I know of that has been decided by a court, and this is Choice Escrow and Land Title versus Bancorp South Bank. Choice Escrow, I believe they are in Missouri, if I remember right. They're a fairly small title company, and as you guys know, a title company wants and needs its wire transfers to move pretty quickly. So Choice, when they signed up for online banking with Bancorp South Bank, the bank allowed them to waive dual control on wire transfers. They had one woman who was in the office initiating wire transfers, and often it was difficult for her to get a second person to approve that wire. So the title company allowed her to initiate and approve her own wire transfers. So for everybody on the phone as bankers, I assume that's setting off alarm bells from an internal fraud potential perspective. But also the problem from a hacking perspective is once a hacker got a hold of her credential, the hacker also could initiate and approve his or her own wires. So the title company sued the bank here, and the verdict actually came down in favor of the bank. The bank had approached the title company on not one but two occasions, encouraging them to use dual control, and the title company had declined. And I believe that they actually, when the bank put a waiver in front of them that said basically, sign here to indicate that you're admitting that you're not using our recommended security procedure, the title company signed it. So the bank produced the waiver in court, and that helped them to win the case. This case did go to appeal, and the appeal verdict came down in favor again of the bank. And the interesting thing was there, the change in the verdict on the appeal was, in the initial case, that the bank had said, if we win, we want the title company to pay our legal fees. And in the initial verdict, the judge said, nice try, Bancorp South, you win the case, but you're not collecting legal fees from Choice. And the appeal verdict, the judge said that, yes, indeed, the bank could collect legal fees from the title company. So, again, not legal advice, but just two cases that I think are very relevant to, specific types of fraud. And, again, because these frauds are not necessarily, I'm sure the fraudsters are attempting to defraud big companies like AT&T, but more often you're going to see a mid-size or a small business that's hit by cases like this. All right, so on slide 25, we talk a little bit about data breaches. I'm sure as bankers on the phone, you're all aware, again, perhaps painfully, of the idea of a data breach. But again, you need to make sure that your small business clients are aware of what a data breach is and how important it is to store data. So again, I know that you guys can read and won't read the whole slide to you, but regardless of how small a business customer is, if they're accepting credit cards, you need to make sure you're talking with them about PCI compliance. They need to take a look at the data that they're collecting and storing. To give you an example, a company that we worked with told us that they had a system where a customer could use a credit card, swipe a credit card to validate like they're checking in. And the vendor that was providing that service for them was storing the credit card data. And even though there was no transaction happening, the card data was still being stored. So the merchant went back to the vendor and said, we don't need to store that data, get rid of it. So we want to make sure, and then, you look at small businesses, they hopefully are not using knuckle busters and carbon paper, but I know there are still businesses out there doing that. So make sure that your customers are aware of, appropriate data collection and storage. All right, and then so my last slide, slide 26, our hope is that today, after hearing us talk to you for a little bit, that you'll be ready to take action. We encourage you to go out to fedpaymentsimprovement.org and find the toolkit. It is a free resource. Feel free to use it, share it with your small business customers, with your fellow small business bankers, and talk with your clients about that. We are looking at developing a second version of the toolkit that we could expand to include things like the migration to EMV. Obviously, we're well on our way there, but from a small business perspective, that October 1st liability shift is not going to be. We're not going to have a lot of small businesses that are ready for EMV by October 1. I think that's going to be quite a long time before we really have small businesses moving in that direction. We'll look at emerging or other alternative payments, authorization forms, things about ACH returns, and then some further case studies like the one that Sandy walked through with you guys. We are open to suggestion. This is what we came up with, what we think is important, but if we've missed the mark, if there are additions that you think changes we should make to version 1, additions we could make in version 2, we would be happy to hear from you guys. And I think with that, I'm going to turn it over to Mary Hughes for question and answer time.
Thank you, Matt. The first question is for Sandy. A friend of mine owns a lot of buildings and rents apartments to people. He tried ACH and didn't like it because often there were insufficient funds in the account when the ACH payment was scheduled. Also, his bookkeeper didn't like ACH because their bank grouped rents all together in one amount, and she had a hard time figuring out which renters had paid what. She likes checks better for this reason, as they appear individually on her online banking statement, which makes her reconcilement efforts go much easier. Given these sorts of problems, I was wondering what advice Sandy would give to bankers who want to help landlords effectively switch from checks to ACH for rental payments.
That's a good question, Mary. I have heard very similar things before. What I try to tell them is if they're not using ACH, they don't have a dependable cash flow when those checks will come in. And if they're having insufficiency, they need to pick the obvious days of the month that people get paid, whether they're 1st and 15th. And if they're renting to seniors, don't forget about the 3rd of the month. That's where the majority of that Social Security comes in. As far as, because that will cut down on their insufficiency. As far as the everything being all in one lump sum, I would say that's something they need to get with their financial institution, because depending on the software, they should be able to maybe do a batch per apartment building or even a one-on-one, but their financial institution should be able to help them either divide that out, or what most do is give them a printout or report of what made up that big grand total. So they just need to talk to their financial institution.
Great, thank you very much. The next question I'll direct to Matt. What types of payments fraud should small businesses worry about the most?
Well, I think there's a couple of answers here. I think based on the responses to the polling question at the beginning of the fraud section, I think check fraud is definitely one that they need to pay a lot of attention to. The other thing I would mention, though, is that I talked a little bit about corporate account takeover. And I think, the concern there is that a lot of times a small business person is no more savvy really at times than your average consumer. So again, outside of the banking industry, do your small business clients know that they shouldn't click on links in emails or, things that they should be looking for to determine that an email may be or is suspicious. And then the last thing I would mention is that something that we've been hearing a lot about from both corporates and from bankers as well is that I've seen it referred to as different things. I think the FBI and the FS-ISAC are referring to it as business email compromise, or BEC. Some people just call it like the CEO email or masquerading. What's happening here is that the hackers are getting into not the online banking system, but into the business's, server environment, and they're compromising the email accounts of employees. Particularly, they're going for they're going for big titles. They sometimes call it whale fishing as well, because they're going for sort of the whales at the company. So like the CEO, the CFO, et cetera. And what they do is, they watch the email for a while. They figure out, maybe the CEO is going to be out of town for a time. When the CEO is out of town, they send an email purporting to be from him, to the CFO and say, we're looking at an acquisition, or, I need this money moved for XYZ reason. And they get the CFO to move the funds, hopefully without asking questions. So that's something to be on the alert for as well, making sure that, would your CEO normally send you an email, or, instead should your small business, should their procedures be that somebody needs to complete an actual form and sign that, to make sure that the transfer is really intended.
Great, thank you. Sandy, one of the webinar attendees asked for the full website of the calculator that you like to use to illustrate the savings to the customer. Can you repeat that for people, please?
Absolutely. It's electronicpayments.org.
Great, thanks. And then we have a disaster recovery question that goes like this. Do you or do you know of any banks that discuss disaster recovery for creating ACH files in the event that their online banking system goes down? When I refer to disaster recovery, I'm referring to having the capability to create an ACH payment, payroll file, or template, as an example, to give to the bank in the event their online banking ACH systems are unavailable. Who would like to take a crack at that one?
I can give what I've heard that banks do is you can get partner with a shadow bank to where they would allow you to use their resources. And I can tell you something that we did when we had a ice storm that crippled 75% of our city here in Springfield, Missouri, also where Choice Escrow was. Anyway, we had generators running, and we were able to get our customers to actually bring their data in to our bank, and if we had to hand key it for them, we did, to get payroll through. Nothing else went but just payroll. Matt, do you have ideas?
I know more about how things work between us and the banks. So yeah, the idea of a buddy bank or alternate access point is typically what we advise. The other thing I have seen people do is, from a bank perspective, if your online banking is down, and your customer can't get something to you through online banking, do you have a core, even if you're running your core in-house, is there, and I'll just name, Jack Henry, for example. They have a data center here in Allen, Texas, not far from Dallas. So, if a bank in Dallas, if their online banking platform was down, whether it's NetTeller or not, could somebody take that, somebody from the bank or the business, take a file on diskette to Jack Henry's data center, or could they, FTP the file to Jack Henry? I don't know exactly what any of the core providers offer in that scenario, but that might be something worth looking into as well, if your core provider actually has a data center that can serve as a backup.
Thank you. In the interest of time, that's probably the last question we'll be able to address during this time. But we will be formulating answers to all the questions that were submitted at this webinar, and we will be posting that document on fedpaymentsimprovement.org along with a recording of this webinar and the slide deck. So with that, I'll turn it back to our moderator, Amy, in St. Louis.
Thank you, Mary. I'd like to thank you all for joining us today, and a special thanks to Sandy, Matt, and Mary for their time. We will be sending a short survey via email, but if you're on the webinar, I'm going to push a link to that survey now. You only need to complete it one place, the webinar or the email, so we know how we're doing. We take all that feedback into consideration. So this concludes our webinar for today. We hope you have a great one. Bye-bye.